In a fairly efficient market, it's not easy to find mispriced securities, but Barron's thinks it identified a few over the weekend, and the market seems to agree. I'm Jack Otter, editor of Barrons.com. I'm here with Jack Howe, senior editor at the magazine. It's the big Roundtable. It's kind of like a birthday party Barron's throws every year. This was part 2 with Jeff Gundlach, who's a favorite, Meryl Witmer, who's a favorite. We're going to start with a really interesting Jeff Gundlach pick that is up about 2.5% today.
You're not supposed to be able to make money in bonds right now. Well, last year, someone forgot to tell Gundlach that because he had that closed-end bond fund that he picked last year, and you made like over 20% in it because it was trading at a big discount to the value of the bonds in the portfolio. So you had a fat yield, but then it got merged into another fund and merged at NAV, so all of the discount went away. You made a lot of money for a bond fund. Now he has another one. He thinks that kind of outcome is unlikely for this one, but look, you're buying, a lot of it is ordinary stuff.
We should point out it's called the Putnam, the Premier Income Trust from Putnam, right?
Right, and you're buying some of these 3% Fannie Mae's, but the thing trades at a discount where he compares it with going out and buying a 10-year Treasury right now, and instead of getting just under 2.5, getting closer to 4%. I mean, if you could buy Treasuries at that kind of a discount, everyone would. It does have, as he puts it, some spicy things in the portfolio that are a little bit riskier. But
and it's important to point out that one could argue that you're actually buying those Fannie Mae's at par, and you're paying a huge discount for the Brazilian and the Russian bonds, which maybe ought to be sold at a big discount.
Maybe it gives you a 6% and change yield on the portfolio. He saw potential for about a 3% gain this year. It didn't take long because I think it's up
2.5%,
2 and change. So you're
there.
Still getting the high yield. Maybe there'll be better things to come down the road for it.
And it trades an 11% discount, which were a little less today, but that could close over time. He says it's usually no more than about 8%, but there's your upside. Alrighty, moving on to Virtu. This is a Meryl Witmer pick. Again, it's kind of an obscure thing. She digs into the numbers and thinks that she's found an anomaly here. It's a market maker, funny in light of the flash crash and the Great Recession, that it had to call itself Virtu.
Right. Right. It's an electronic market maker, and as she points out, don't paint this with this high frequency trading brush. This is a company that makes money, on the bid-ask spread, and it has some, heavyweight customers out there. J.P. Morgan is one of them. She thinks it's going to get more and more business going forward, benefit from the further push toward electronic trading, and it's basically cheap. Looking at what she thinks the earnings power is, it might trade it around 10 times, and she argues probably should trade around 13 times. So it's not. You don't really need any dramatic pricing to have a pretty solid gain on the stock.
Part of the pitch here is that it actually takes steps to root out strange stuff going on. If it thinks it's making too much money, it apparently halts trading in that.
Really?
Because it probably indicates something's wrong.
Wow, that's quite benevolent of them. I mean, would you, if you thought you were making too much money, would you halt what you're doing?
If Jamie Dimon said, "I'll throw you my business," yes, I would.
Okay.
Moving on to a Barron's pick. Jack Willoughby makes the case for GameStop.
Yes.
This is a company that has absolutely been taken out to the woodshed. He thinks the beating has to stop.
GameStop is dying one of those slow Shakespearean deaths. It's been dying now for years and years and years, and the cash flow is great, right? Obviously, they sell discs. They're being hurt by the trend. When you see these video game publishers saying, "Hey, our margins are rising because there's more and more game downloads, and that's cheaper for us," and the world is obviously moving toward downloaded games and away from disc sales. The question is, how quickly will it do it, and how much money will GameStop earn between now and then? And how brutally punished has the stock been when you buy it? Because if you buy it cheap enough, there have been times in the past where you make good money on a trade in this stock, even though we know that the long-term prospects are bleak. It's about 6 times right now. I think you get, what's the dividend? It's got a mantra. I want to say like 6%. I could be wrong, but it's got one of these big, beefy dividends just because
it has very good cash flow.
Because cash flow is good, and the share price has gotten pounded. So. Yeah, I don't think you lock this away in little Timmy's college fund for the next 10 years, but I think you can make money on a trade here, sure.
Thanks a lot, Jeff.
Thank you.